enter puts here again. Okay, and here we have a semblance of a downtrend, so we're just going to go ahead and mark that out. Okay, so as long as price stays below this red line, then our puts we're going to stay in them. We're waiting for our next swing to mark the downtrend. But remember, I said you can bounce from these levels, so you want to wait for the last one to form, which is this one right here. So I'm going to show you both ways, where you trail your trend line down and when you don't. Okay, so this is called trailing your trend line. If we kept our original trend line up here, there's a lot of room for price to come back up and stop us out, but we'd be giving up all these profits. So by trailing your trend line, you're trying to hug the line to the price to keep it as close as possible, so that gap for your stop loss is not that much. You're going to be able to keep most of your profits. Okay, right here, this is where you would have had to manually stop yourself out because you broke the line that you set for your stop loss. All right. Still respecting the original line though. So if you did not have this line here, you would have still been in the trade. Still in the trade, still in the trade, even lower now. Okay, so our original entry was at 616.29. So we just hit $1. Right here, we're hitting some support right here and bouncing back up, still below the downtrend line. Okay, right here, this is when I'm going to start trailing my trend line, because this is a steep drop and you should expect a bounce. Anytime we have a V recovery is usually after a drop like this. Okay, so at this point, if you stayed in the trade based on this line, you haven't trailed your trend lines down, but this is where you need to start doing it. What we do is come from this point and mark it down to here. So see, our trend line is getting steeper and steeper. This one, there's less space for price to move before we get stopped out versus this. This is a lot, right? Versus this. All right, so we have our fair value gap. We're gonna wait for this is the last one to form, so we're gonna go ahead and mark that. All right, it wasn't. See what I mean? If you had marked this one, you would have got stopped out. This one stopped out. This one, we'll see. Stopped out before it eventually came back down. So this is why you just kind of have to use your intuition and based on your back testing when you set this downtrend line while price is trading inside this fair value gap. But if you were patient, could have kept marked that once that last one forms. Or if you didn't trend your stop lines at all, your downtrend line at all, your stop loss is still up here, you're still good, still in the trade. Still respecting this line. Okay, and at this point, keep trailing your stop loss. Boom, stopped out right here. Or if you didn't mark that one, you still be in the trade based on this line, this line, this line. Boom, stopped out based on this line. And so that just shows you that trailing your trend lines is just based on your risk tolerance, how low you think the price can go, and just how much you can stomach in reversals. So let's just say that we had that last one right there, right? We would have rode those puts from 616.30 all the way down to 611.51.